Possible layoffs at certain hotels, and Caesars Entertainment being removed from the S&P 500. Visitors have questioned whether the Strip is still a value destination.
We need to talk about what's going on with Caesars. Revenues are down, occupancy is slipping, and they were just kicked out of the S&P 500. So what does that actually mean for Vegas, for visitors, and locals like us? So here's the deal. Caesars Entertainment, the company behind a lot of the iconic resorts on the Strip, is in a slump. In the second quarter of 2025, their Las Vegas revenues fell about 3.7% compared to last year. That doesn't sound like a lot, but for a company of this size, that's tens of millions of dollars gone. They're also selling fewer rooms. Occupancy dropped by about 2 percentage points. That's roughly 27,000 fewer room nights sold in just one quarter. And on September 22nd, they were officially removed from the S&P 500. That's the VIP list of America's top 500 publicly traded companies. Being on that list gives a company prestige and visibility. Being dropped from that list shows the opposite. The company's smaller, less stable, or struggling to stay profitable. A lot of index funds automatically hold S&P 500 stocks. So when a company's dropped, those funds have to sell. That can drive the share price down even further and make it harder for the company to borrow money or raise cash for new projects. Right now, Caesar stock is down about 30% this year and more than 50% over the last 2 years. Very alarming news. They're carrying about $12.3 billion in debt. They tried to raise money by selling off some of their bigger assets like the World Series of Poker and the Link Promenade, but it hasn't fixed the deeper issues yet. So you may be asking yourself, why is this happening? Some of it's on Caesars, but some of it's bigger than them. It's about Vegas as a whole. First, tourism's down. Visitor numbers have been falling all through 2025 with a big dip, about 11% in June compared to last year. Second, prices in Vegas are sky high. People are complaining about dynamic pricing, expensive rooms, overpriced food and drinks, and resort and parking fees that feel like scams. For a lot of visitors, that's enough to shorten or cancel their trip entirely. Third, the economy. Consumer confidence is weaker nationwide, and that's hit our biggest feeder market, California, especially hard. Fourth, fewer international visitors. Caesars CEO pointed out Canadian travelers were a big part of the missing room nights. When Canadians, Europeans, or other international travelers don't show up, it leaves a huge gap. And fifth is the competition. Regional casinos and online gambling options have exploded. People who used to make a yearly Vegas trip can now gamble closer to home or on their phone. By the way, if you're finding this breakdown useful, make sure you subscribe to the channel so you don't miss future videos where I dive deeper into the stories you care about, showing you the real Vegas with honest, unfiltered reporting. So what's Caesars doing about all of this? They've rolled out a bunch of deals and promos to try to get people back. For visitors, they're offering hotel and food discounts if you book ahead or stay longer. They also joined in on the citywide discount event that recently happened called the Fabulous 5-Day Sale. This was an event that offered limited time deals for resorts, entertainment, and attractions. For locals, they've started offering special dining and hotel discounts. I guess acknowledging that residents finally matter too. The big question is, will it work? Caesars says they're expecting a soft third quarter but are optimistic about the end of 2025 into 2026. Their CEO points to a strong group calendar, meaning conventions and large events are expected to pick up later in the year. If these things happen, it could stabilize revenues. From my perspective, I'd love to think this downturn is just temporary, but honestly, it feels like people are fed up. There are so many constant price hikes, hidden fees, and people are feeling squeezed at every turn. Vegas definitely doesn't offer the same value it used to. The 5-day sale might have given Caesars a quick boost, but I don't know if it will change the long-term trend. We'll have to wait and see. Caesars and the Strip as a whole may need to rethink how they price and market their experiences if they want people coming back. I mean, just look at some of these numbers. The resort fee at Caesars is over $50 a night. And at some of their other value properties like Flamingo, Harrah's, and Horseshoe, they are now charging $50 in resort fees as well. Not too long ago, those properties were offering resort fees under $30 a night. And that's all on top of the room rate, which is already much higher than it used to be. The bottom line is, when you add steep resort fees like this to already high room rates, you start pushing some guests away. If they want tourism to fully recover, they'll need to turn this 5-day sale into an annual event and continue to offer more perks throughout the year. They also need to continue taking care of locals, which they have completely disregarded in the past 4 years. I'll keep tracking this story because it's not just about this one company, it's about the future of Las Vegas as a destination.